In this video, learn the secondary trading strategy done better. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, a firm prop trader breaks down his secondary trading strategy, and then I challenge him to consider an even better way to trade this strategy. Let's get to work on sharing these important trading lessons so you can grow your trading account.
This trade was on Skills, and this was following their offering. And this was actually 2 days after the offering, once the price was released. And my game plan coming in was to use that price as a floor, which ended up working pretty nicely for a end of day breakout. All right, so here's some details on their offering. So it was announced on March 17th in the pre-market. And it was a 32 million share offering, and this was an underwritten public offering of their Class A shares, and this was split into kind of two segments. First was the Skills shares, which was 17 million, and then the second portion was some of the stockholders, which was 15 million. This was just going to general kind of working capital and corporate purposes. And then none of the stockholders' shares are going to be counted into that, so just the 17 million will be used. And then 2 days following in the pre-market, the offering price of 24 was announced, which was actually a little above where, or a little below where it was currently trading at.
So Sam, this is a secondary offering as opposed to an IPO?
Yeah, it was just an offering. This was a SPAC merger back in December. So this was just the secondary offering to raise capital. And then going through, this is just kind of a brief history of Skills and some recent catalysts it has had. So December 17th, it was acquired by a SPAC, and it started trading on the NYSE. In first day trading, really solid move, around $18 to 22. Consolidated for a while, really received some buy targets and price target raises, which was a pretty positive catalyst. But the big move for this was their NFL deal, which was a multi-year gaming and esports agreement. And you can see by this move, it's super strong, like $29 to 46, which is around like a 61% move. And that is in a pretty much a 2-day period. So this sell-off was a little warranted, but this was also around the same time a lot of the growth stocks were starting to get hit really hard, and especially a lot of these SPAC names that have moved a bunch. And this fell right into that category of a SPAC that definitely ran a little too much. You can see by the price movement.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
And then it had another little positive catalyst for their first earnings since the SPAC merger. And they actually had a lot of pretty key points in this. Revenues doubled, gross profit grew by 95%, and a few others, including strong guidance. And then I'll go into this a little further, but you can kind of see how this $24 range, which ended up being the offering, was a very key level of support. And on that slide is definitely one of the big parts of my trade.
To lay down some context, a really good sector to be in. You know, you've got gaming, you've got esports, and then the SPAC sector has been pretty interesting as well.
Yeah, definitely. So this had a lot going for it for a pretty wild move like this. And just for a little more context, Skills is it's kind of like an esports company, but it's more in the competition field. So tournaments and stuff like that. And it does a lot with Android and iPhone games too. So this NFL deal is really big news at the time. So now I'm going to go into the offering, and this is following the earnings. The earnings was a few days prior. Got a nice little pop from that, and then got hit pretty hard the previous day. And then after they announced the offering, it went from around $30 down to this $26.50. So it got hit pretty hard. And I wasn't a part of this trade at all, but this is another setup I like to take where we get a retest into the offering, not the offering price, but the price zone where the offering was announced for continuation of the move to the downside. But yeah, this is just covers what I already touched on, the 32 million shares with 17 million being for Skills. And then following the retest that offering price, we saw pretty steep selling through the offering price low down to this $24 level.
And the offering price, the secondary offering price was 24.
Yeah, and that was announced on this day, March 19th. So at the time, it was trading around like 25, 24.50. Then right around, so that would be 8 Eastern, it was announced that the price was 24.
If you can just go back to the last slide, just so that I think you guys know a lot more than other people who may watch this in the future. So you see there's an offering announced on March 17th. So am I correct in stating that there was just an announcement that there was going to be an offering, but that the price hadn't been announced?
Offering price typically comes out to sometimes one day, but typically like 2 to 3 days after. And most of like the big traders, I would say, don't get involved until the offering price is announced, because kind of in that 2 day in between period, it's a lot of speculation of what you're thinking the offering price could be. So let's say if it was trading at 26, like 26 became key level support following the offering, and then all of a sudden the price is announced and it's at $24. If you're in long, you're just going to get killed for that 2 points, because like I said earlier, that 24 is typically going to be a magnet. Price is going to get pulled into it. And for this trade I'm looking for a bounce off of the price, you really want to see it get under a few attempts to get under 24, but then ultimately consolidate above, hold above, and then see some volume coming in to the upside.
So you're sitting at your desk, and it is announced that there is going to be an offering in Skills. It's March 17th, you're at your desk, and there's an offering that gets announced. That can be a good breaking news short trade. And the reason for that is if you are going to buy a secondary, you're going to want it at a discount. To raise money, you're going to have to offer it at a discount. And so it's almost always not going to trade. It's going to almost always trade below the price that it's trading at when they make the announcement. So there's that trade, and then after that there's some speculation that can go on. But I'd almost say that the price that it's trading at the time of the announcement can be your resistance as well, because it's almost always going to trade lower than that. So you've got a breaking news trade, and then you've got resistance trades, a resistance level to be considering until there's actually a price that's put on the offering. And so if you move to the next slide, as you were saying, Sam, 2 days later, they actually give us the price.
Yeah, exactly. And at this point, just in the 2 day period prior, it's down 9 points, and this is something I like to see if I'm going to be taking a bounce trade off of the offering price. I want to see it really weak, either the previous day or the previous 2 days, so there's solid amount of meat left on the move. And then because if it was priced at 25 or 26, it becomes a totally different trade. So having the offering price at 24 ended up working out like perfectly, I would say. Yeah, this slide just emphasizes that 24 offering price, and it's a good sign in the pre-market that we're already kind of hovering in between that price without running through it very steeply prior to the open.
I'll just provide some context here. So the stronger the stock prior to the offering price announced, the less likely it is to actually go back to that offering price. So if you've got a really strong company that's done really, really well and there's an offering at 24 bucks, that stock is going to hover higher than 24, and you're going to look for value buying up there. The fact that it's pulling back into 24, look, I think the SPAC, there's a lot of reasons for that, but it's not always going to be the case that you're going to go find that offering price. And in fact, the stronger stocks are never going to get back there.
Yeah, exactly. Going into what I touched on with the 24 level, you can see going back to December when the SPAC merged, this kind of 23.50 to 25 range became really key support resistance. Like coming in as previous resistance, finally get above, acted as support. And then this was the same level of the earnings where we got a bounce at. So coming in, I'm pretty happy with this zone as my possible entry zone. And to get involved, I'm going to be trying to buy on this lower end, the 23.50 end, or ideally we could get like a quick wick down to 22 and I could pick up some shares there. But you'll see in this example, this 24 kind of 23.50 ended up being where all the true buyers were stepping in, I would say. So coming into the morning, this is similar to this previous slide I showed. This was the trading plan I had. So for my entries, when I'm involved on these, I want to buy in if there's a steep selling right off of the open. I want to buy into that with smaller size, risking below this 23.50, just to pick up a little bit of shares and see if I can get solid prices before, if we do end up consolidating above the level.
Why do you want to buy something that's below the secondary price?
So that kind of gets me in at a position of strength. So for this setup, I really only want to be involved if we are
But if the stock
consolidating.
is but Sam, if the stock is so strong, why would it get below 24?
Well, it's not strong at the time. That's kind of, I mean, you can see by the chart, it's super weak. So I'm hoping there is kind of another leg of selling. And then ultimately, we end up holding above the 24. So if I'm in from, let's say, 23.60s or 23.80s, and then we're consolidating above this 24, I'm at really protected price where I have like high conviction that we're not going to see those 23.50s again, at least for that day or the following 2 days. So then I can set stop at break even. But this was more for kind of like a quick scalp and then hold a core around it. There's a lot of different ways to treat the entries on this.
So what's your stop then?
So for this one, it was 23, like in between this 23 to 23.45 range. And I just had limits stacked at 23.75, 70s, 60s, and then 52s. And then I was risking all of those against 23, I think it was like 23.44. And then if I got hit out of that, I would look to revalue it.
So you're really playing against that 23.50 level?
Yeah.
Why is that 23.50 level to you more important than the secondary price of 24?
It's more so just playing it against this support range. It's not that 23.50 or 24 is more important. It's more so where I can get the best prices. So if I can get 23 and I know that 24 has a high, or 23.50s, and I know 24 has a high probability of being kind of that floor for the trade. So I'd much rather get in at these lows rather than just buying 24 right off of the open. And then for targets, these are just some of my initial targets, but as the trade goes on, you'll see I kind of alter, end up not really taking too much off at the 25 level and end up holding most of my core to this 26. And so this is kind of exactly what I want to see for a all-day consolidation for a end-of-day breakout. So I've tape on this, but we ended up coming into that little spike range. But the most important part of this consolidation is this 3 hour, 45-minute period following the first 30 minutes of the open, where we're consolidating above this 24 level. We only drop it once, and you can see we drop it and instantly rebid. Come down again, buyers are stepping in. There's a really strong held bid at this level. And then this 24.50 was resistance for the day. So for a trade like this where I'm looking for an end of day breakout, I want to see really long consolidation period like this, and then I can look for some measured moves for profit targets sort of thing. But this kind of just highlights the period. So it's from 8:40 a.m. to 2 p.m. So pretty much full day consolidation going into the close. And this was only within a 15% range of its ATR. So 50-cent price range. And then for an end of day breakout, I want to see this holding above this 24.70 range, which is high of day, and then ultimately 25, which was pre-market, for a push to the 27, 26 range. This slide just shows like the full day of price action. The most important part is this volume coming through at the end of the day once we reclaim this 25 level. So you can see all day consolidation. Majority of it is above that 24 level, so that's a check in my favor. We have a little trend line breakout, not putting too much emphasis on that. I'm putting most of my emphasis on this pre-market low to high day range and to be able to hold above, which we have here. And that's a really big change of character for the stock, to be able to break out above 24.50, come down, retest, and we see buyers step in. And at the same time, we start to see volume pick up. You can see even this first volume bar, and then these four large ones are all, massive compared to all the volume bars following the first 30 minutes of the open. So we see volume fade, get above 24.50. We see the first inflow volume, but then the true volume comes in on the $25 breakout. And then just for some targets, the previous day's low as well as the after hours low were stacked at the same level. So that's obviously a pretty strong spot to take off some risk, whole number as well. And then I only had a little bit of size for this last push to 27, but that was also the opening range low as well as the pre-market high. So that's a pretty strong confluence level in these two for targets. And then I can play a quick tape of this 25 breakout, and you'll see the change of character. So the main thing I'm highlighting on this tape is the volume inflow and just the change to be able to hold above this 24.50. So at the time right now, we had that first push above high of day, pulled back, and we just got bought back up very steeply. You can see this move from 24.50 to 25 is all in 1 minute. Really no selling pressure at all in that candle. So now we can flip over and look at the tape for this 25 breakout. And another change of character is this 2490s. So once we are able to hold above, they stacked the bid really strong on the 90s, and we weren't able to drop that level once we got above. The offers are still looking pretty strong. Oh, and something else I want to highlight, this was more of a swing trade. So I bought my first shares in the pre-market at 23.83. Then I got my last fill at 23.66. That's kind of that range I had a bunch of my limits stacked at. And I didn't take any of my size off in between this range at all, because for this trade is either it's gonna work or it's not. I'm not too interested in taking a little bit off at 24.60s or even in this range. I treat this trade as a swing trade, so I'm still in full size. So I was kind of sitting on these shares all day during this consolidation range, especially when it was holding above 24. I was like, all right, I'm gonna hold 100% of my size as long as we're above 24, and then I'm gonna start piecing out above 25. And so now we're approaching that 25 level, and you can see the offer is stacked, but the size is just taken out almost instantly in the 98s and 99s, and now we're coming into the 25s. And once we see this 25 break, I really want to see a bunch of volume come in and us not just wick above and then have the offer step back down on 25. I really want to see us crack this level and see continuation through. So there we go. We get the crack, but really not that continuation yet. Now we're starting to get a little bit of a move. And you can see I have some exits layered out. Looks like I have my first one at 25.33, or I took a little bit off at 25.07, just in case if we did get that wick and failure. Now 25.08s, hop on the bid with a bunch of size. You can see we're getting pretty solid volume coming through, but this is nothing crazy. It's a change of character, but for a $25 breakout, especially with how key this level was intraday, I really want to see more volume come through, which starts to confirm in a few minutes. I'll fast forward a little bit. So I ended up deleting that first exit, so I took another shares off at 25.37. But the one thing is we're just kind of grinding higher at this point. We're not having any explosive moves yet, so I'm definitely ready with my fingers on the hotkey just in case we do get a quick reversal. Because for something like this, I want this move to be much faster than we're seeing now, but it is a good sign that the bids keep stepping up, like 35, 40s with a bunch of size too. And now we're starting to see the tape speed up a little bit faster. We're coming into 25.50. Took a shares off again at 25.47 in front of the whole number, or the half number. And you can see we got through this 25 level, 25.50 without really a fight. So at this point, I definitely could have done a better job of holding on to more of these shares. You can see I'm already down to 50% of my position, when in reality, there was really no reason to be trimming too much size without us kind of wicking around. And then I have another video next on a solid reason to exit. So at this point, this is fast forward a little more. I'm out of majority of my size. I trimmed a lot in the upper 26 range, but just to show, this was kind of where I ended the video previously, and then we were able to hold above this 26.50 level, which is that previous resistance, and see some follow through. And this is coming into like the last 5-10 minutes of the trading day. So now we finally cracked the 27 level, and this is usually my main exit signal. Is when we come into a whole number, we push above, but you'll see we end up failing relatively soon, and then we completely reverse and we're back at these like 25 40s within a matter of 2-3 minutes. Because at this point we've ran from 24.50 to 27 in the matter of less than an hour, so it's definitely getting a little overextended. So I took a few more exits, got some at 27.17. So at this point, still really no reason to be completely flat on the trade. Fast forward a little more. All right, yeah, so here's kind of the point. So those 20s drop, and now you can see all the bids are just kind of getting much weaker. And for me to hold this trade or possibly re-add, there's some solid re-adds in these spots, but for this, you really want to see 27 hold and not drop. You can see a little bit of size on 27, but that gets taken out really fast. And these 90s aren't really showing any type of bid at all. So when you see the wick above push to like 27, above 27, and then 27 drops almost instantly, these 90s are somewhat holding. But then once those 90s drop, that's definitely when you want to be totally flat. So at this point, I'm not really worried about getting totally flat, but I end up cutting it once we drop 26.60. Then I think, yeah, I stopped the tape right there, but that's just kind of like the whole number, wick above, and reversal to get flat after we've already seen the whole move. And then to wrap it up, here's just my exits and entries. So I had some in the pre-market, trimmed most of that size just right off the open for a little bit of cash flow to pay myself just in case if I do get stopped out on all these stacked limits that I talked about previously. Then it's either a small loss or a risk-free trade, and that allowed me to get some pretty solid entries in here. And then, like I said, I held all this size for a end-of-day breakout, which ended up working out pretty nicely. And then a few things I could have worked on better is definitely these first few exits at this first tier at 25.07 and then these 25.50s. I think since I held this trade all day intraday, I definitely should have been a little more patient and taking risk off and waiting for the first turn. Because the first turn or kind of sign of weakness ended up coming at this 26 level. So definitely should have kept a core for the rest of this move into 26 and 27.
You can see the wedge pattern that forms between, just withdraw that wedge pattern. Is there a trade for you to add size as that breaks above the wedge pattern?
Yeah, that's another thing I could have definitely done better for this trade. You can see I had no re-adds, and this is such a clear wedge breakout pattern. And then even when this volume confirms, instead of taking these exits off at 25, like some of these should be adds for my longs, especially once we have that confirmed break above high of day, we pull back and we just have that candle. So right where I started that first tape video at, once we broke 25, that 100% is a possible re-add spot. I just wasn't initially too confident adding on like this first wedge break because you could still see at the time the volume was super dried up. It's coming into the close. I know this isn't too correlated to SPY, but SPY at the time wasn't looking too strong. So I just wasn't super confident on adding, and I was already in. For me, it was pretty solid core. It was around the core I was trying to get coming into the day. So I was happy with my size, and at the time the context didn't look great, but I mean, tape-wise, definitely some momentum ads should have been put on in the 25, or even front run the 25 break at like 24.80s or something.
From my seat, developing a strategy where you're buying above 24 and getting bigger because it's holding above 24 is a strategy that will lead to more consistency and allow you to be bigger in this setup. I don't want to sit here and say that you shouldn't think ever about buying below 24. And certainly there is that 2350 support level from some of our longer term charts. I just don't really like the idea of buying stocks below support. Support is $24. That's the place where they did the deal at. When it's trading below the price they did the deal at, that's below support. You know, it can hold, it can wick below there, it can shake some people out below there. But you tend to make the most money in trades that are clean, and you tend to make the most money in trades that are showing strength on the long side, and then confirming your strength. It's a bit of a trade that's too hard to trade it below 24. I think you got a little bit lucky. I mean, I see the 2350 level, but you got a little lucky that you didn't get stopped out. I don't think it's terrible, because I do think 2350 is a little bit of a level, but from my seat, I would recommend giving my 2 cents that a study of how do I buy this when it's holding above 24, and how do I buy more of it, is a more sustainable, psychologically easier, a way to get bigger, a way to be more consistent strategy than but I don't want to tell you guys how to trade. If you feel like on your longer term charts 2350 is technical support, and you feel like that in combination with a little jiggering around 24, the secondary price, makes sense to you, I mean, okay, and as long as you keep your stops tight, okay. I think that's a hard trade. I think that the buying above 24 and the adding when the wedge pattern breaks back to the upside, and when it's holding above that 2460-ish area, I think that's an easier trade. And
Yeah, I totally agree with that. When I was doing like setting up this kind of PowerPoint, one thing I was thinking about was the kind of why put all my eggs on the basket right off of the open with all these limits, where this very well could have opened up and just washed everyone out. All my longs could have triggered and then stopped out in a matter of 10 seconds, and I probably wouldn't have touched this trade.
and it wouldn't have meant anything, and it could have done all of that and not meant at all that it wasn't going to trade higher. That's what I meant by saying you got a little lucky, because that can definitely happen without it meaning it's going down, or it can just be some stops getting set off because it's below 24, and some price volatility because it's below 24, where you can't really control your risk as to how much it's going to wick and trade below 24 for a short period of time. But when it's holding above 24 and time goes by, it's easier to control your risk. Anyway, appreciate it, Sam. And thanks to the tape. Really good job with the tape there. And an excellent job with your exits. Good example there. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at S&B, train and trade well.